All right, so it'll start streaming in a minute. I think we should be good.
Okay.
Yes, there you go. Okay, perfect. All right, so welcome everyone. This is something that we've been planning for quite a while now with RB and Caroline, and I know that a lot of you already have contacts with these two. I've had RB attend. We have done sessions together, and this time around, we really wanted to talk about a little bit about money market funds. And this is something that I think is very beneficial to what we do, what she does. So we established, a connection and said, let's just do something about money market funds, right? So I'll get started. I'll go to the presentation and then we'll just get going. Tim, can you confirm that you can see my screen?
Yes, I can see it very clearly.
Okay, perfect. All right, so RB, welcome. And I'm going to get you started with this. I didn't give you a heads up, and I did not want to give you a heads up because I wanted to talk a little bit about this proverb. So sometimes I listen to Spice FM. You're familiar?
Yes. They're very good with that.
Yeah.
Yes.
We start with a proverb, right?
Yeah.
So I say, okay, I'll push this to RB and see what happens. So what does this mean in terms of money market funds? A ripe melon falls by itself. What do you think that means?
Yeah, so for me, I don't just think it's about money market funds. I think it's more about investing. Investing is something that you have to nurture along the way. The power of investing only really comes into place if you've been in the market for over 3 to 5 years' time.
Right.
And so again, it's a great proverb. Actually, I've heard it before, but in the context of investments, I'd say it's definitely you're going to reap the rewards of investing and that magical compounding, the eighth wonder of the world, compounding.
Right.
You see it after 3 to 4 years. And I think this is exactly what it says. Let the journey take its course, and when it's ready, you will see the returns.
Awesome. Yes, and I would say the same thing. It takes a while. I don't know how long it takes a melon to ripen, whether it's, 6 months or 1 year, I don't know. But at some point, it does. And then you get to reap the benefit once it's followed. So let's get started. So this is a money market seminar. And usually when I do this, I will always want someone to walk away with some kind of education, not just, presentation, or do this, do that, but some kind of education about what we do, what RB does. And so there's a few slides I put together. RB might add on to this, but I started off with this pyramid. And a lot of people usually associate pyramids with Abraham Maslow, the psychologist that came up with a pyramid of, you start off with food and security, and then you walk your way up towards self-actualization. So the same concept. This is where when you talk about your monies in the bank and how you invest, you obviously start off with checking and savings accounts. And this is what a lot of people do. They'll just put money in checking and savings accounts. And usually banks do not even give you any kind of a good return because they're assuming it's a checking, you write off checks, and a savings, we just put money there for emergencies. And those are the type of accounts that they'll handle. And by the way, if you have questions, you can put them on chat as we go along. We'll answer these questions in the long run. So as you climb this ladder, you notice I've highlighted the second part there of money market accounts, right? So this is where you will move your money when you start appreciation. You look at the left, you see this arrow moving up. There is an increasing potential for capital appreciation as you move your monies up this ladder. At the same time, there's also a huge risk of loss of principal. So as you continue investing in some of these programs and partnerships and in investing vehicles, you realize that there could be a loss of capital particularly if you're now in speculative stocks, you're doing options, you're doing futures, it can be, you can really lose your money. Right? So there's safety in accounts that have low returns, but there's also loss of purchasing power. So as inflation, you have to bear in mind that there is inflation that affects how you invest your monies. So this is just a very good visual of when you think about where you're putting your money, think about this pyramid. So we'll talk a little bit about money market accounts, money market funds. That's the topic of discussion today. RB, did you have anything about this pyramid that you'd like to add?
No, I would just say that with every investment, there's a place for every investment on your plate. So think of a balanced diet. You have carbohydrates, protein, and vegetables. And there's a place for all different types of investments, but you just need to understand how to create the most balanced investment portfolio. So none of these investments here are a bad idea, and none of these investments are the only idea. And it's how do you put these together in order to achieve a good return based on your financial goals. So there's a lot here. Of course, if you increase your risk, there's high reward, but there's a smart way to do it. So today we'll help you put together a balanced portfolio.
Mm-hmm. Perfect. All right. Now let's move on to this one. Okay. So same concepts. You are thinking about where to put your money. You might actually be thinking, I just want to preserve my capital. I don't want to lose it. And some people are like that, very conservative. They are afraid of investing. You tell them, oh, there's a money market fund at 15%. I'm not sure. There's a money market fund at 10%. I'm not sure. So if you're preserving your capital, obviously you look at this type of baskets, right? Money market funds, certificate of deposits, treasury securities. You want to feel safe. Then there are those that want liquidity. So they want this money as fast as possible. If there's an emergency, can I withdraw it in a day, in 2 days? So these are the type of places that you'll consider. Then there is current income. So if you're looking to collect some kind of income every month, every 6 months, every year, then this is where you put your money. Bonds, right? Equity income funds, because they generate some kind of revenue that you can collect as income. Capital appreciation. So if you invest in stocks or you put it in REITs or DPPs, direct program plans, direct participation plans, they can get you some kind of appreciation to your capital. So there is a return when you put it in stocks. Speculation. All right. So one of the big things about speculative assets, and some people consider actually Bitcoin, cryptocurrency, as speculative. And they don't know where to do with it. They'll put it in that basket of speculation. Precious metals, other people consider it too. And then the last box here is tax advantages. So if you are looking to offset your tax returns by investing in these assets, municipal bonds, particularly here in the US, they can help you to do this. So this is how you view your monies, and based on your investor profile. And I don't know how many people have done this, because when you open an account with Ndovu, the first thing they'll require you to do is KYC. So they want to see what type of investor are you. And RB, I think you have Elon Musk, I think, right? I think adventurers. Which other ones do you have?
So we have adventurous, and we say that's Elon Musk because in that particular individual would be looking for more high growth, but is happy to take the more volatility that you get from taking the high growth. But we wouldn't say that high growth for us is speculation, because we do it in a responsible way. And I'll talk a little bit about that. The second portfolio is balanced. So this is someone who's looking to preserve their capital, but is looking to make some growth, but not with too much volatility. And then lastly, it's somebody who's conservative. And that would be somebody who is looking for just capital preservation, but outpacing inflation. And if I remember correctly, I believe we put Warren Buffett as conservative and Jay-Z as balanced investor.
Mm. Okay. So Elon Musk is adventurous.
Yes, because so just as a personality, we were trying to meet the personalities with the type of investment portfolio. And Elon, everyone knows, is a bit always trying to achieve a lot of growth. So somebody who's always wanting for high growth, but it's okay and can handle volatility. So yeah,
Great.
and they're all really good profiles to have.
Yes, yes. And I would be curious whether Esther from Canada has done this. I don't know what type of investor she is. I thought I was actually one of most aggressive investors, but when I do some of these portfolios where I just run my numbers and say, I found myself to be actually conservative. I really surprised myself. I thought I was.
It's age, Pete. It's age.
So what type of investor?
You and I have to lie about my age to fit how I feel about my investments, because one of the biggest factor in determining risk profile is the length of time you have to invest. So if you're a young person, if any young person is listening here, it's better to start now, because as the days go by, then no matter how aggressive you feel, the profile will not put you in a risky profile. So sometimes I have investors where you can overwrite. I'm not sure about Ndovu, but I think in some investments that I do for my clients, we can overwrite and explain why the client wants to go in a profile that doesn't suit what the numbers look like. I'm an aggressive investor.
Okay. And I think actually, Carol, RB, you do have sessions where if someone signs up with Ndovu, you can give them, I think, half-hour session or I think an hour where you talk to them and establish what type of investor they are.
Yeah. So essentially what we do, the reason we do that quiz at the beginning is because a lot of people think they're aggressive investors or adventurous, but they actually fall into balanced and conservative. So we have over 71,000 users on our platform, and 73% of them are balanced investors, and a small amount are, because our population is slightly younger as well. When I say younger, I mean it ranges from 24 to 55, but majority of them fall between the 30s and 40s. And they are, like Esther said, able to take a bit more risk, and that's why they fall into balanced. And then the younger generation seem to be a bit more adventurous, which makes a lot of sense. But then what we do as a value offering is that we will have you sit down with one of our relationship managers and really walk through what are your goals, what is your age. But the actual initial algorithm is done purely based on investment concepts. So it gives you what you should be looking to do. But again, with investing, it is personal. So if you are in your 50s, but you know that you have your retirement sorted and you wanted to allocate $20,000 to a more riskier profile for your grandchildren, then of course it's okay to run risk. So our relationship managers really help you figure out, okay, how do I secure my future? And then how much risk should I take in order to grow my wealth now in the more adventurous space?
Right. All right. So I heard you say 25 to 55. So 55 is young. I feel good. All right. Okay.
I would like to add something on that, Pete. The younger investor, the other thing that would bring down their numbers for risk is because they don't have much. That also factors in. The more you have, so it's like that's why almost everybody falls into a balanced portfolio for the most part, because if you are young, you don't have much, and if you don't have much, then you can't risk. It brings your numbers down. So it's very, very difficult. It's possible. Maybe people in like the mid-age kind of people where they have accumulated something, and maybe because they took a lot of risks when they were younger, so they have found a way to accumulate a lot, but they still have a lot of time to grow their wealth. Those will turn out aggressive. So that's that. And I like what RV said about sitting with someone and kind of walking them through, because sometimes investors answer questions based on how they are feeling.
Really?
You know, I have encountered people who tell me, if we ask this question, what would you do if your money was lost 20% in 6 months? What would you do? And they say, oh, I would take all my money out. But then they say, oh, and I have a trading account. So they don't know how to place risks.
Right.
Actually, Peter, I thought when you are going to do the ladder, maybe it's a little bit off topic now, but I thought you'd do the ladder about how you should first do a budget, then put some money for emergency.
Going back.
Because sometimes even before you invest, you need to know whether you have the ability to.
Yes.
And before you can invest, there are certain things you need to take care of before you can even think of investing.
Before you get into this pyramid, yes.
Yes, and I thought a lot of people aren't aware of that.
Right.
Some people don't even have enough money for emergency. Some people don't have a budget. They don't know how they're spending their money. Mm-hmm. And I think that's always the best place to start. Right. So that you know how much you have and how much you have at your disposal. Then when you know how much you have at your disposal, then you can determine what can I risk, what do I put in a safe place, and things like that. Yeah. Right. But maybe that's a topic for another day.
But it took us a while back, that, which is good. You start with budgeting, figure out where your money is going, coming in, and then now you can start working on this.
I could just give a couple of rules of thumbs that we like to share with our customers. Number one, you do need to budget. You need to understand what's coming in and going out. And the key tip there is that it's actually the small expenses, like buying a coffee every day that you think doesn't have a big value item. But if you were to just invest, a coffee is about $7 times 5 times a week. If you were to invest, the value that you're leaving on the table is quite high. Secondly, you should be looking to save up to 25% of your income. So when you do your expenses and you think that it's more than, you're not saving up to that 25 mark, you need to make some changes. And then just a rule of thumb, you should have 3 months of runway. So 3 months of expenses in your emergency bucket, which should either sit in a money market fund or a bank account because of liquidity, which Pete mentioned here. And then just a rule of thumb, you should never hold your money in the bank, your additional cash, and you should look to invest it based on your investment profile, and just work backwards to say, what are my financial goals? Because once you understand what they are, like buying a house that's going to cost me $1 million, how much do I need to save for my down payment, gives you a plan. Once you have a plan, you're a man or a woman with an action. You can do the right actions to get there. But majority of us actually don't think about money like that. We think about, I have this much savings. Okay, great. And so if we just think and reframe, okay, what are my goals? And then work backwards, you get them much faster.
That's right. Okay, so if you don't have a budget worksheet, just let me know. We'll get your budget worksheet to get started so that you can get going with this journey. All right, let's move on. Okay, so money market funds. And I think there's a definition that has different meaning here in the US, because we do have money market accounts and money market funds, but we are primarily talking about money market funds in Kenya, right? Because this is a novel product. So this is the actual definition. It's a unit trust fund, and it is managed by a professional fund manager. So one of the things that I ask a lot of people to do is, if you're investing money in Kenya, you need to find out whether whichever company you're working with, is it regulated by Capital Markets Authority? So you go to the Capital Markets Authority website and you can look for any of these companies. Is it a fund manager? Is it an authorized stockbroker? Is it a forex? What is it? What is it regulated to do? And if you do, then you'll find that Ndovu is listed there as a fund manager, right? So they are regulated by Capital Markets Authority. And one of their roles is to make sure that whichever monies you give to them, they can act as fiduciary. They are able to take care of your money like they would on their own. So I put together this slide. So at the top here, you can see Ndovu Money Market Fund is in the middle. And let's say Tim, I didn't list you here. Oh yeah, I did. Tim.
I'm there.
Oh yeah.
I have 750K.
Yeah. So
Thank
if
you.
let's say Tim gives that to this money market fund in Ndovu 750K. Then I have Gish. This is a good friend of mine. 5G Limited. I don't know who that is. So I just came up. And then Kimani, I put 200K. Onyango 50K. Seed here. I don't know. She put 2 million. Yeah. So all these monies go to money market, Ndovu money market fund. Now they are responsible for managing it. So RB, what do you do now? Now we've given you all the money.
Yeah, so the beautiful thing about a fund, so money market fund, is that you have a professional managing it. So we have our portfolio manager and investment committee. So before you set up a fund, you actually set out what can the fund manager do with our investors' money, and that strategy is reviewed by the Capital Markets Authority, and they say yes, you're in line with the guidelines for this particular type of fund. And it is our job to then go out into the market in Kenya and look at what investments are going to give us the best possible return with the right type of risk that we're looking for. And the beauty about money market funds is that they are low risk. Their goal is to preserve capital. And so what we would do, and which we're doing already, not what we are already doing this, is that our portfolio manager goes out there and looks for cash-like securities that have the technical term is duration, but have a time period of 18 months and below. So this is looking at instruments such as fixed deposits at banks, which in Kenya have high rates. Fixed deposits have high rates. The more money you have, the higher the rates that you can negotiate. And we actually work with a list of 12 different banks in Kenya to get the best possible rate. But again, looking at the credit worthiness of this particular bank as well. The other thing we look at is T-bills. So the government of Kenya has been issuing some very interesting T-bills. They've been ranging anything from 13% all the way to 19%, and therefore you can earn really good interest on that. And of course, we look at commercial paper. So short-term paper that is, again, less than 18 months that are offered to by either commercial companies or corporate companies that are looking to borrow money to fund their business operations, but it's a short-term loan and they say, we'll give you an interest rate, and it varies from company to company. So it is our job as your fund manager to make sure that the investments that we're giving meet our investment strategy. They go through a set of risk requirements that we look at, but also look at the worthiness of the company, the government, etc. And the goal is to generate a risk-adjusted return that is competitive. And the beauty about the Kenyan market is that we generate a return which outpaces inflation. And even if you were to convert the return back to dollars, because these companies are offering a higher return, the holding a money market fund in Kenya makes sense. So if I was, for example, sitting in the US, I wouldn't hold a cash fund because the interest rates have just come down. They're going to come down further, and it doesn't make sense. But in Kenya, I do recommend holding money market funds because they generate a really good risk-adjusted return, meaning the return you're getting based on the risk you're taking is very favorable. So that's what we do. And of course, there's 3 people full-time on this fund, looking at your money, looking at investment companies, looking at what we hold, look at what else can we put into this fund. Okay,
so this is where you would put your money: T-bills, commercial paper, fixed deposits. And I do have something there on 270 days, so anything less than 9 months. So your money is invested in short-term instruments so that you can generate this kind of return. I don't know whether anyone has a question on this slide, but if you do, you can ask it. We'll come back to it. All right. Now, I
have a question.
Yes, Yocha, go ahead.
Okay, so when you put, and I was listening to what she was saying, if I put the money in Ndovu and I want them to manage it for me, there are 2 options. You can either put it there, they manage it for you, or I can manage it myself. I know if they manage it for me, there's a fee they charge, which is a little bit higher.
Mm-hmm.
But I can put my money in Andorfo as a vehicle and manage it myself. What's the difference?
Oh, okay. And I think we'll talk about fees in the next slide. So RB, you can cover that question when you get to that slide. Because I think it's a concern where if I'm giving you money, how much are you charging me to hold this? Which is a very good question, Siwacha. So we'll cover that question in a minute. Let's do this slide. This is who's involved in
I'm there, hello?
Yes.
My name is Charles Cairo. Some of us really don't understand what a commercial paper really is.
Oh.
Can you explain in detail so that somebody can be able to understand it? Yeah, I've heard of it, but
yes. And Cairo, that's a very good question. By the way, yeah. Cairo is a tax guy. He's a good accountant. All right, go ahead, RB.
I think you can take this one.
All right, so commercial paper. All right, I can take this one. So Cairo, when you have institutions or companies and corporations that are looking to raise capital, for instance, let's say you and I have a very good company, Peter & Pete Investors, and we want to enlarge our services to Australia, Saudi Arabia, and now we are looking for funding. So we only have 1 million right now, but we are thinking if we can obtain another 2 or 3 million, we'll expand our services. So what we will do is ask any investor to partner with us, and they will loan us that money. In return, we'll let them know, we'll give you a 10% return or a 15% return for your capital. So that's commercial paper. So companies do this all the time. They raise funding to enlarge their services or to increase manufacturing. You have a lot of companies that do this, whether it's private or they go to the public to do this. That's commercial paper. And usually the rate is actually a little bit higher than just regular money market funds. So that's what commercial paper is.
I was about to ask what platform do they use? Sorry. What platform do they use to raise the money? Do they go to the stock exchange to raise the capital there? But I think you mentioned they can do it either public or privately.
Yes, they can. Right. And actually, if you are looking for commercial paper, let's say you have an investment fund like Faida, for instance, in Kenya, and you approach them and say, is there any commercial paper I can invest in? They will look for companies that are looking to raise money. It can be Tuskys, it can be the defunct Nakumat, it can be any of those companies that are looking to raise money. And when you invest in them, it's high risk, but the return will be a little bit more. So
a commercial paper is traded in a stock exchange?
No. This is usually private.
Private, okay.
So you will realize, and this is actually, I know there might be a question about this. There are some money market funds that have ran into trouble because if you tell Capital Markets Authority, we are investing 20% in T-bills, 50% in fixed deposits, and another 20% in commercial paper. Right, so you are actually taking some of this money and loaning it to commercial purposes, commercial paper. There was actually a situation where Amana Capital was unable to generate revenue because they skewed some of their money and gave it to Nakumat bond. So Nakumat was looking to raise money, and then you know what happened to Nakumat? It went bankrupt. So that affects the money market fund. So it's very important that you understand where some of this money is put. And this is why I say Ndovu is a fiduciary. They have to act as if they are taking your money and investing. They have to be very careful with where they're investing so that they don't run into these kind of problems.
Yeah, maybe you can also define what fiduciary is. Some people may not know what meaning of fiduciary.
Right. Okay. All right, so fiduciary is almost as if you give me your money, I'll treat it as my money. The same way I would spend my money, I would be very careful. I wouldn't, go out and say, I want Starbucks at the most expensive coffee there is. No. If I just wanted a cup of coffee, maybe I'll just take, black coffee. That's how I would treat your money, just as my money. All right, RB, you have something to say about this?
Yeah, I wanted to just say about this commercial paper. Now, yes, historically, there were some challenges on fund managers holding Nakumat in a cash fund. But since then, partners like us have coached the regulator to say, you cannot allow them to have a duration, so the time frame of a commercial paper be more than 18 months. Typically, it's less than a year, so 80% of your allocation has to be less than a year, and 20% is a little bit more. And because of that now, the risk, if you're not holding something for too long, the risk comes down as well, because you're likely to recover your money much faster. But there's been a lot of work that we've done with the regulators to say, in a cash fund, why is there a bond, a Nakumat bond that was 12 years long? And historically, they used to also allow you to have infrastructure bonds. Again, they have longer durations of 18 years. And so we've done a lot of work with the regulator to say, no, cash funds should be liquid, safe assets. And that's where we come in, really. We really look at what are these commercial papers we're going to look at. We are very careful with the type of partners we work with, because in this moment, commercial paper is probably the most, in this bucket, high risk investment you can do in the money market fund.
All right. So, Cairo, I hope we answered your question. All right. Now, let's
one more question before we leave the topic.
Oh, there's still more?
Yeah. Okay. I was just wondering whether RB can tell us how they allocate the funds in terms of percentages to the three assets that you mentioned, the T-bills, the commercial paper, and the fixed deposit. What percentage you allocate to what?
Yeah, no, perfect. So again, like I mentioned at the beginning of running a fund, you have to set a strategy, and within that strategy, the regulator approves the allocation you're allowed to have in one of these three buckets. But what we do is that we don't like to put too much money into one bucket, because again, there's something known as counterparty risk. So it's known as, you're working with 12 banks. You don't want to have all your eggs in one basket with one bank, because they're saying to you, I'm going to give you 21% return. So we have really tight bands around that. So if I just give you a high level distribution, because it does change on a monthly basis, ideally we look to put anywhere from 40 to 50% in fixed deposits, 30 to 40% into T-bills, and then 20% into commercial paper. And this is really important. We try and keep the risk within the band of a cash fund by minimizing the amount that we'll get into commercial paper. And we do our independent due diligence. We go see the factories. We go speak to the corporations that are doing DD. And this particular part is monitored daily. But again, the bands change. So the range changes, but that's a high level what we look at in terms of the allocation.
Great. Perfect. All right. Very good answers there. Now let's move on to this slide. So this is now what happens, who's involved in that money market fund. So RB, you can tell us about the fund manager, custodian, trustee, auditor, who's involved.
Okay. Yeah. So this is really important actually with any fund, not just the money market fund, but with any fund that you're investing in, whether it's an S&P 500 fund, or this is how the asset management industry works. So all these stakeholders, so the fund manager, the custodian, the auditor, and the trustee are independent of each other. So not in any fund will never have the custodian be the trustee or the fund manager be the auditor, because the idea is that they're independent bodies that are here to safeguard your investments. And it is the job of the regulator, which is an independent party. So just imagine a circle. So in this the circle to the left, in this situation, the Capital Markets Authority, the SEC in the States, or the FINRA and FCA, that make sure that these four independent stakeholders do what they're meant to do in order to make sure the money that you're giving somebody are safe. So in this scenario for the Dovu Money Market Fund, Dovu is the fund manager, and our responsibility is to go out there and look for investments that meet the criteria of a money market fund to generate a return. The custodian is the safekeeper of assets. So in this example, Pete will come to us and give us $1 million shillings. And Dovu, as a fund manager, does not have access to that 1 million shillings. When Pete sends the money over, it actually goes to the custodian. And then we say, okay, the fund manager will say, okay, custodian, we now have decided to invest in the fixed deposit at KCB, equity, etc. And that's when the custodian will say, okay, I'm going to now move the cash to those banks, and they give you in return an asset which they safekeep. And the beauty of a custodian, and this is applicable on local markets, global markets, is that should in an event a fund manager go under, the regulator and the custodian come together and they say, hey, we have all these individuals, Pete and 100 million other individuals, they all have these allocations. What should we do? And they contact you. It's a long process, 6 months, but they contact you to say, would you like to move to another fund manager? Or would you like to sell your assets? So the custodian is a safekeeper of assets. Now, the auditor is very important. I'm sure some of you are auditors. You audit, the job is to audit what is happening between the fund manager and the custodian and the trustee to make sure that all of these parties are doing what they say on the tin and they're doing it in an ethical way. And this is why this is a very key function. So they'll make sure that the fund is being priced correctly. They'll make sure the valuation that's being given is correct. The movement of funds is being done in the way that it's meant to be done. And then the trustee is the godfather or the big brother, should I say, that looks at the decisions that the fund manager and is making and the management of how the funds are being moved in and out by the custodian. And the trustee sits there and says, so for example, if I wake up, like the portfolio, not me, because I'm not the portfolio manager, but if the portfolio manager of Dovu Money Market Fund wakes up one day and says, okay, I think we should go buy Tesla shares, the trustee will not allow that to happen. The trustee will say that is not what this fund is set up to do. So no, this cannot be happening. They have power to tell the custodian, do not place that trade because it doesn't meet the criteria. And so this is what each of these individual counterparties are there. They're there to make sure that your money is being managed with what you say you want it to do. So you invested in a money market fund because it's low risk and you know it's going to generate steady returns. And all these individuals have a legal obligation to actually do that and not invest in things that are not meant to be in that particular fund.
All right.
I have a question.
Yes.
Okay. All right, Tim.
I wanted to know typically who is a trustee. Is it a bank? Is it typical? Who is it? Who acts as a trustee? The other question is, as a fund manager, are you the one who chooses who will be your auditor, who will be your custodian, who will be your trustee, or who does that?
Yes. So to answer your first question, a trustee can be a bank, a consulting firm. So, for example, for Dovu, the trustee is KCB Bank, but they have a trustee business within their bank. So KCB is known to be a financial institution that mainly does banking, but within the banking branch, they have a trustee specialized department, and they help with being a trustee. It could be PwC, Deloitte, so consulting firms or a financial institution that understands being a trustee. To answer your second question, yes, it is the fund manager that chooses the custodian, the auditor, and the trustee. But before you set up the fund, the regulator will tell you, yes, we're happy with your choice of trustees, auditor, and custodian, because they're all independent. And for example, let's say I wanted to use a consulting firm like PwC to also be my trustee and my auditor, the regulator would say, no, that's a conflict of interest because then you've not got independent decision making here. So that's how it typically works. The regulator gives you the sign off, but it is the job of the fund manager. Now for Dovu, the Dovu Money Market Fund for us has been the fastest growing fund for us as a business. And so we actually have 2 custodians set up. And we're currently using one, but we know that when we hit a certain threshold, we want to also make sure the assets are split over 2 parties. And that's because we want to manage, it's a technical term called counterparty risk, but it simply means that I'm not going to have my life savings with one bank. What if that bank goes under? I'm going to split my risk by actually using two banks. And that's essentially what we're doing with the money market fund.
All right. So you have trustee, KCB, custodian who's that?
So our custodian is DTB. That we currently use, but we also have custodial services with Equity Bank and SBM Bank in Kenya. And our auditor is Park Randall.
Okay. All right. So, and this now brings to when you open an account with Ndovu, they will ask you to send your funds to DTB. That's the reason. So you may have gotten in touch with Caroline and she tells you if you're ready to fund your account, send it to Ndovu Wealth Limited Diamond Trust Bank account, because that's their custodian. Okay. Somebody had another question. Was there someone with a question here? Okay. All right. Okay. Now on to Siocha's question. He was concerned about management fees and if I manage it myself, what if Ndovu does it themselves? So I did put together just an illustration, and this could be the actual illustration or not. It's just an illustration of how your monies would be accounted for. I don't know whether RB you want to do. I think your management is 2%, right?
Correct. So would you like me to go through it?
Yes.
Perfect. So first of all, we haven't spoken about the return that will be generated by the Ndovu Money Market Fund. The return is expected to be 15.5% this year, and that is net of fees. So that's a strong return. So actually, we're generating a return of 17.5. So the way it works is that the fee that we quote is net of fees, so 15.5, but there is withholding tax of 15%, which is earned on the interest. So I now will go through the diagram, because I know I'm a visual learner, so I'll go through the diagram itself. So Ndovu's money management fee is 2%, and that we generate a return of 15%. So you, in your pocket, you're originally getting 15.5%. The way the management fee is applied, it is done on a monthly basis. So you simply take the 2% divided by 12%. 12 months, and you're being charged 0.17% every single month. So let's say you invested 10,000 shillings, and so every month you would be paying 17 shillings for your fees, and the withholding tax is 15% on interest. So let's say you're making 10,000 shillings, and we are telling you that the return is 17.5%. This is before fees. On that 17.5%, we have to pay a 15% tax, which is standard across all funds in Kenya, to the government. And so you're going to have, that. So that is 1,500 shillings on the interest. So actually this slide is a little misleading because it should say, I'll just do it for you. So first thing, just bear with me. I'd rather just make sure I don't give wrong numbers. So 10,000 shillings.
That's the interest. I was, counting, or if you've already received 10,000 in interest, so it doesn't tell you how much you invested. This is the interest you've collected now. You're getting all these fees.
That's correct. So, exactly. So it's the interest. So, for example, if you've invested 10,000 shillings, you earn 17.5% on it. You're earning an additional 1,750 shillings, and of that, you pay 15% on that over the year, which is 262 shillings. And if you divide that by 12, that's 21 shillings every single month. But we do that on an annual basis. So that's how it works. But thank you, Pete.
So it depends on how much money you have actually invested. Just do the math. Understand it's 2% annual fee divided by 12 months to get the monthly charges that you are going to incur. Also remember there is a withholding, 15% withholding tax that goes to KRA. It doesn't go to Ndovu. It doesn't come to me. It goes to KRA, right? Yeah. And then whatever is left, Siocha, is now what you pocket as interest from this fund. And now after that, you can start compounding your money if you want to do this every month. You have to remember though, that if you want to build this account, and let's say you have set aside 50,000 to be going to this account every month, it's best if you do this at the beginning of the month, not at the end of the month, so that it accrues interest for 30 days. So you do this at the beginning of the month and you keep doing that continuous. So we had another illustration, I didn't bring it up, but assuming you put 200,000, 250,000 every month, the math was really incredible. If you just do 15%, you do this for 5 years or 10 years or 20 years, it's amazing how much it can compound. You do?
Yes, I'm going to see if I've got mine open, because we do our own money market.
Okay.
And I have a really powerful illustration. Like we compare how we do in terms of return versus when you're holding money in a bank, and it's really powerful because you can start seeing the value that you get. So I'm just going to share my screen, so just bear with me. Really quickly, because I think it's really powerful. Okay. Can you confirm you can see my screen?
Yes, we can see your screen.
Perfect. Thank you. So this is really powerful. So this is Dobu Money Market Fund. We've done it on 15%, not even 15.5. Actually, yeah. And this is a really powerful thing to remember. This is already net of fees, right? So the fund is actually performing better and you're still earning this return. So let's just say, for argument's sake, that an individual was saving 100,000 shillings every single month. And again, this is what I said at the beginning. We spoke about the right melon. And in year one, if you were to save and invest your money into the money market fund, you would be at 1.4 million shillings. And this is after the management fee, not the withholding tax. And if you were to hold your money in a bank, actually you'd be at 1.3. So it doesn't feel like a lot of money in the first year. And that's the thing about investing. You don't really see or feel the impact in a short period of time. But if you were to do this behavior consistently, month on month for 5 years, which actually comes a lot quicker than you think, you would be sitting at 9 million shillings. And in the bank, at a return of 3%, you'd be at 6.5 million shillings. So you're actually leaving 3 million shillings, which is about $30,000 on the table by just leaving your money in a bank. And I think that's and of course, that's the missing piece, right? That's the education piece that we weren't taught at school. And the reality is that when it comes to now moving on to 10 years, the difference gets wider because the money that's invested is compounding over time and it's compounding at a faster rate than what it would compound in a bank. So this is a really powerful tool just to see where you would be. And so whether you did 200,000, and I think the key thing we always say here is that make sure you are building strong investing behaviors, because Rome wasn't built in a day. And whether you want to start with 15,000 shillings, 10,000 shillings, 100,000, obviously do what you can manage. But the idea is to do it regularly. Pete, over to you.
Okay, I had one more question.
Okay.
Sure.
When you say you target 15%, will that always remain constant, or how long is it fixed? Is it fixed for 1 year, then you reevaluate the next year, or is it fixed for your fund throughout the time I'm with Ndovu?
No, so the beauty about investing is that it's not fixed for the year. So at the beginning of the year, we will say we are targeting an expected return of 15.5% as an example. But it varies. So from year to year, it'll vary because, as you know, those treasury bills, they're short term. And so the government changes the rate at which they offer. So that return that you're getting this year is not going to be the same return next year, but it's not too dissimilar to what we expect. And on average, we think that in a money market fund, depending on the economic sentiment, the way the government behaves, we're targeting anywhere from 13 to 19%. So that's been our goal for us for the Durban Money Market Fund.
Okay. All right.
A question here, Peter.
Yes.
So that the keyword there is target. If you're targeting 15, there is no guarantee at 15. It could come down. It could go higher depending on the market. The other question I have there is on the withholding tax, the 15% withholding. Are you paying that to the government because you're paying the interest monthly, or can that be annual?
No, so the withholding tax is done annually.
Okay.
So that's great because you're still earning money for a year on your money because the interest is reinvested in the money market fund. So you're still earning money on it before we pay taxes. We were just giving you the example per month, though, just to understand it.
Okay. The management fee is monthly, but the withholding is annual.
Correct.
And can I terminate my account early, or can I withdraw from the account? If there's need for liquidity in between the year, or
yes, you can.
Okay. Yes, and we are going to go over the fund fact sheet. That way, you know exactly.
Question.
Oh, yes.
Sorry.
Yes.
Do you compound monthly or annually?
So compounding is done actually daily.
Oh,
so
good.
Yeah, so it's a daily compounding fund. But we'll tell you what you've earned on. So even the price changes daily, but we were just showing you the example on monthly because it's more daily would be such small numbers. It doesn't make sense.
I have a question on withholding.
Yes.
So the 15% withholding is monthly or annually?
It's paid annually.
But you're withholding it from my interest every month, right?
No, we don't hold it from your interest every month. So what we allow you to do, and it makes sense, is that so for example, if you were to withdraw mid-year, then yes, we would hold the withholding for the period of what you the period that you were in, but when you're exiting, because we have to pay that to the government at the end of the year. But interest is reflected daily in your account, so you'll see your your fund money move daily. And to answer your question, it's actually paid at the end of the year. Withholding tax is paid at the end of the year.
All right. It looks like actually.
Peter, I had one more question.
Okay.
Is there something we call double taxation where, I can see here there's a withholding for 15%.
Yes.
And then when I file my taxes as a personal, where I have to declare my income, with the KRA.
Yes.
How do I avoid double taxation? Because at that point, it's going to be considered as income.
So one thing I'll say, we don't give tax official advice, but the earnings that you earn from a money market fund don't need to be taxed again because you've paid your tax from the withholding tax. But it's always great. I mean, we can guide you to somebody who can just write. In fact, we can send you a blurb from a tax person to say this is how it's managed, but you don't get double tax. So you're not also getting taxed on the capital gains on that because you've already paid your tax.
Okay.
So the money market fund in Kenya is very efficient. It's probably the only, this and the infrastructure bond are two investments, and the fixed deposits are investments that are tax efficient. Because you pay taxes beforehand, and it's very similar to exchange traded funds in the States as well. So taxes are paid, so returns are given net of tax as well.
Okay.
Can I say something about taxes, Robin?
Yes.
So on the issue of taxes, I think the fiduciary, which is involved, does not have control on that.
Mm-hmm.
What happens is every individual investor is supposed to check with his tax advisor.
Mm-hmm.
Because at the end of the year, when you are putting in taxes, you have to indicate what your capital gains were. So your tax advisor will tell you that you had already paid taxes maybe at the beginning or at the end. So it's always good to check with your tax advisor for anything concerning taxes, because with capital gains is the way it's calculated is a little bit different from other taxes.
Correct. That's a very good point, Siocha. Yes, if you are not working with a tax advisor on this, you should at least reach out to them, let them know. And this is something you should be doing anyway, where you are establishing your portfolios and working with a tax advisor on what you are investing in, and they can guide you on how to take advantage of some of the deductions and reduce your tax implications. All right, so let's move on to this towards the end. So I did get a few questions, and I think we have answered some of them. RB, I want you to pull up the fact sheet if you can, and then you'll answer the question there. Why choose Ndovu and not anyone else? And can you lose money in that account? And how do I get started?
Okay, brilliant.
Yes.
Yeah, so while I'm pulling up the fact sheet, so to begin with, to answer your question, the reason we would say choose Ndovu is, first of all, you're sitting in the diaspora and you need to understand what your account value is at any time. The one beautiful thing about Ndovu is that we give you transparency at all times, because you actually have access to your account at any time, and you can actually manage the process end to end. So you can withdraw, you don't have to speak to someone to withdraw anything. It's all digital. And that makes it easy for people sitting in the diaspora. As well as, if you needed help, we have relationship managers that are available to speak to you. So Caroline is one of our relationship managers. And the other thing I can say is that as Ndovu, the strategy here has always been, we make decisions based on the customer's funds are kept safe. So customer security of funds is really important. So we are less likely to be tempted to generate a 1 more % for you by taking that additional, that risk too much. And I think that's something that we really pride ourselves. So we wouldn't try and give you the additional return, because I don't think people who invest in this particular fund are looking for a higher risk in order to get more return. Right? The key goal is to keep your money safe. So that leads me to the second question, which is, can you lose money? So one caveat, any investment comes at a risk, but the management of this fund will not allow you to lose money. We target to ensure that your capital is kept safe. And how to get started? So perhaps let me explain the fact sheet first, and then we can get to that. Okay, so Peter, just give me a minute. Yeah, wonderful. Okay. So this is the Ndovu money market fact sheet. The fact sheet is basically an information guide that tells you how the fund is structured. And it's a summary, a one-page summary that gives you all the information that you need. And the fund objective is what the fund is trying to achieve in this instant. And our objective is to deliver a higher level of income compared to what is offered by banks' fixed deposits. And we're looking to preserve your capital whilst giving you protection from inflation. And that is pretty standard across all money market funds in Kenya. So the key features we have here is capital preservation while protecting your wealth from inflation. We offer a high degree of capital stability with limited risk. So this means you're not going to lose your money, because the goal here is to preserve your capital to begin with and to generate a steady return over time. And the key thing is that we invest in short-term investments. And that helps because it reduces market volatility. And the beauty of why choose this fund, again, I mentioned, especially for individuals in the diaspora, you can't just walk to us. Whereas we have financial clinics, people come sit in person with our relationship managers. And the thing is that you can monitor your account at all times. Liquidity it's all digital, so everything moves within the app. So you don't have to call someone to withdraw your money. You can actually get your money back within 3 working days, which is the industry standard. We are regulated by the Capital Markets Authority, but we're also regulated by the SEC and FINRA and FCA because we offer global markets. So that should give you confidence that our processes and foundation are built on really strict rules and requirements because we're regulated by a US entity as well. We're offering competitive returns, and we assure you not to take a little bit more risk for a little bit of return because it just doesn't make sense. And we manage your portfolio by professionals. So that's what I would say. And then, of course, here are just a few details here. Who's the fund manager? It's Derby Wealth. We launched this in August 2024. It is our fastest growing fund, and its expected return is 15.5%. The trustee is Cooperative Bank. The custodian is Diamond Trust. And actually interesting, and the auditors are Park Randall. The minimum investment is 500 shillings and the top up is 500. Typically, we see our clients do anywhere from actually 100,000 to a million because our target audience is slightly higher. There's no initial fee, and we have a 2% monthly charge, and interest is distributed on a monthly basis, but we reinvest it for you. So you'll see the value go up every single month, in fact daily, but you can. But the idea is that when you withdraw is when you crystallize your return.
I have some questions.
Sure.
Sorry, I'm asking too many. But there are a lot of people probably who don't know who Dovo is, and probably you can start off by giving some background of Dovo, how long it's been around, and in the process also maybe tell us your assets under your management, and also one other thing is the money market fund insured by KDIC.
Okay, yeah, sure thing. So let me just pull up a slide that nicely depicts our journey today. Sorry, it's a number wrong. Wait 1 second. I think we just need to move the...
So RP, while you're doing that, let me just encourage, if you have a question, you can also post it on chat. That way Caroline can handle it, or we'll come back to you. And Caroline, if you can also post contacts there, the website link and telephone numbers.
Yeah, so just a bit of history from the journey of the company. So we actually acquired our investment advisor license from the Capital Markets Authority in February 2022, and we launched our product at the same time. And then very quickly in June 2022, we had to upgrade our fund manager license because we saw a significant deposit rate. So the threshold for investment license was really low. And so the regulator asked us to upgrade. And then in December, so we currently have 71,000 plus users. We've processed over 500,000, not dollars, these are the number of the transactions we've processed. And in 2023, in December, we submitted our license and we acquired our license in January for Rwanda. And we have expansion plans for Rwanda in the first quarter of next year. And we got approved for our money market fund in February 2024, and we launched it in August 2024. It already has 50 million shillings worth of deposits into that particular fund. And as an overall company, one of the key things that we're super proud of is that the average return on our platform, which changes every day because markets change, has been anywhere from 13 to 20% on the dollar. So this includes money market funds, but also our global funds, such as the S&P 500 that we've selected, a technology fund, gold, etc., and which we're really proud of. So that means the average return that our customers have experienced have been in that range. And we have processed over $14 million of transactions. So that's where we are as a company. Okay. I don't know if there was any additional questions on that.
I think you covered AUM, you covered, perhaps you can provide...
and also, sorry.
Sorry, Tim, let me direct attention to Rwanda, because I know we spoke about this the last time. And one of the things you're looking to do is also participate in that market. Do you have any updates on that license in Rwanda?
Yes, so we acquired a license in Rwanda in January, and we are actually in final stages of setting up operations in Rwanda. So we are looking to go live in in early next year, and that will allow us to actually offer bonds offered by the Rwandan regulator. We also acquired our license for Uganda this year. So we're going to be moving into Uganda in Q2 of next year. And again, we're just setting up operations. And the reason, so, it might sound really ambitious, but I can tell you why we're doing it. So we're a venture-backed company. And so we have foreign investors who give us money to generate income. So venture capitalists come in, they look at your business idea, they see if you can grow it to $100 million in revenue. And that really is the goal for a venture business. And so we're backed by some really big names. Plug-in, I don't know if you guys are familiar with this, but international firms such as Plug and Play, 4DX Ventures, Future Africa, and several others. And the goal here is that for us to hit those high numbers in terms of revenue, we need to be in a bigger market, because Kenya's population is 50 million. Uganda is 40 million. These are not exact, but give or take. And Rwanda is a smaller market, but these products don't exist. And the vision for Dobu is to be able to offer the diaspora, Africans, cross-border investments without having to go and set up an account locally in Rwanda to get access to the Rwandan bonds. And the reason being is because actually across the African continent, there's some really interesting investments that generate strong returns, and the risk is much lower. So that's the goal, is to offer Pan-African, including global investments to the whole of Africa, but also our diaspora community.
Awesome. All right, Tim, you had one more question.
Yeah, that's whether the fund is KDIC insured.
Okay. Yes.
Okay. Yes. So no, it's not KDIC insured, but we have our own insurance as well as an organization, and the fund itself has its own insurance, which we can share details on. But no, we're not KIDC registered, insured.
Okay. All right. Now we can take some questions. I know we are catching up with time. Let's see. Some of the questions were answered on.
While you are looking at that, probably she can talk about the political instability, because the markets usually doesn't like political instability. And now that we are moving to Uganda, Rwanda, and some of these countries which are not politically stable, how do you caution on that?
Oh, Siocha, they might disagree with you if you say they are not stable.
So actually, I would say that East Africa has been very stable. I think as a entity, where they've all come together under the East African Association, they're very stable. I would say markets like Ghana has seen significant currency depreciation. Nigeria has seen significant currency depreciation. There's a bit of unsettlement in Somalia. So those are perhaps markets that we're not exploring to go into just now. And we're very mindful of the uncertainty that can be received. So yeah, we do look at that when we think about our strategy. But for now, I can confidently say that Rwanda, Uganda, and Kenya are politically stable. I agree that actually in recent events with the with the VP being removed, etc., may see as unstable, but we've not seen any movement in our currency against the dollar. And then lastly, I'd say is that there is political uncertainty globally at the moment, with the upcoming elections in the US. There's been a changeover in the UK as well. And there's just been a very strange, globally, political uncertainty in lots of strong countries. But we'd like to say that the Kenya shilling has remained stable this year. Last year, we did see some fluctuations, but it has recovered. So that's how we do. So to answer in short, we do look at political situations. So we wouldn't go and get a license in Somalia because it doesn't make sense for us.
Yes. All right. So talking about the dollar.
Sorry, Pete. I have something to a question, maybe a comment or a suggestion. I don't know what it is, but I realize that sometimes people, the population, will feel a certain way about the economy, politics, whatever, and people are scared and they want to sell their investments. They don't want to invest. But the fund managers I have worked with here in Canada and the US, I find that they approach that in a very different way. They use data, and they are very objective. So there's a lot of noise on the TV and in papers and all that, but they don't look at that, which is, I think, what you're saying, that you don't really depend on the noise and all the stuff. You just have data, and you have your data analysts, and they are cracking the data, and they are just doing what the data is telling them. And sometimes I do like that because it's very objective. It's not emotional, it's not subjective. But I was going to suggest to you and Pete that maybe sometimes in the future, you could consider bringing in a data, like a fund manager, who really talks about the data and the trends and what the data is telling us in terms of the economy, in Kenya, in East Africa, in Africa, whatever. Yeah. I think that gives people a lot of confidence. Mm-hmm. And then they know that the people who are managing our money are not managing it based on the noise on TV, but they really do know what they are doing. Yeah, just as a suggestion.
Yeah, no, Esther, I think it's a great suggestion. In fact, next time we can bring our portfolio manager to this. And just to say on that, yeah, we everything is done on data. And because the markets there's just too much noise, social media, etc., just has changed the way people think about investments. It arouses emotions that are not rational. And the only thing I'll also say to anybody is, Pete, just pull up on Yahoo Finance S&P 500, and this is just for investments. In the history of the last 100 years, we have seen a lot of we've seen 22 recessions, and it's taken on average 18 months for us to recover from a recession. And this is why we always say that actually investing is about being patient and believing that the stock market generally is a reflection of human progress. So if we believe that our industries and our, medicine, healthcare, finance will continue the longest time, will continuously improve, innovate, disrupt, and consumers with the internet have higher purchasing power and continue consuming, then we know that the stock market overall will continue to grow because it is a reflection of our human progress. And now with AI on the front of changing industries, we're just seeing the growth that we're seeing. There is going to be heightened growth in the next 5 to 15 to 20 years. And I think so it's not so much about the short-term noise, because here, if you look at this chart, you can see that regardless, if you were just to be invested in the stock market, you are going to make significant return over time. And it's about trying to train yourself not to listen to the noise and become emotional, but actually train yourself to say, the S&P 500 has come down. Great. It's actually a great time to buy because I know it's a reflection of what companies are doing in terms of innovation growth, and people are consuming. So this will continue growing. Now, this is all well said. Again, though, I do recommend that if, like Esther said earlier, if you are in your 50s, 60s, hold a money market fund. 80% of your money should be in a low risk asset. But if you're young and you're on the school and you're in your 30s and you have children that you're saving for, just buy the S&P 500. Okay. And invest regularly. So that was a slightly different topic, but this goes back to what Esther was saying. There's a lot of noise. And if you get caught into saying, oh my God, the market's come down, I'm panicked, you will lose money, because actually investing, like Warren Buffett says, is about patience. And it's not about noise. It's about saying, I believe in the stock market, because history over a long period of time has showed me that it's always grown despite the little moments of noise that we've experienced.
Right. Well said. Okay, Arabi, let's take some questions and then we can wrap it up.
Sure.
There's a question from my good friend, Mr. Mungai, about joint accounts. Can you open joint accounts or a company account? That's a CHAMA, I think. Can you open a company account, a CHAMA account, or a joint account?
Yes, you can. Both of them. You can open a company account and a Chama account. And a joint account is just a Chama account. So 2 people, 3 people, 4 people. And actually, we're next year introducing, due to popular demand, a custodial account where we're educating children at schools in Kenya. So it's a side topic, but we're educating children at schools, and the parent is actually giving them pocket money and they're investing. So we're trying to teach the younger population how to grow their wealth, and we've had significant demand for it.
Okay. All right. There was another question. I think we answered this one, but just for clarification, is the interest capped? So right now you're at 15.5. Does it have a floor, or is it market protected?
So does it have a floor? Yes. So the floor, so our expected return is 15%. And we always say there's a deviation of 2% over the year, right? So we're looking for this year to deliver 15.5%. But because these are cash-like securities, they're fixed returns, we can estimate the movement. And so there's no official floor, but it's unlikely you're going to get 2%. It's very likely you'll end up anywhere at 15.1, 15.2, because a lot of these assets have already been priced in. And in terms of, is there a cap? The answer is no. So we're trying to deliver as much as we can, but we do it in a risk-adjusted way. So So I hope that helps answer your question.
I think you answered it. Okay. All right. And then there's someone was asking for the Capital Markets Authority website. We provided that one. Caroline has already posted the phone numbers. The website Fondovu, you can get started right now. If you get stuck for some reason, reach out to me. Let me know. I work with Caroline most of the time. Even in the middle of the night, I'll wake her up and let her know that someone is looking to do this, and she's very good. Let's see. Is there another question? I don't see another question there. Just for perspective, this fact sheet says that the minimum investment is 500 shillings. I did the math. It's $3.90 to open an account. $3. And top up, $3. So instead of, wasting these on Chipotle, beans, and, I think in Canada you have, what is that?
Tim Hortons.
Tim Hortons, yes. Coffee. Go ahead, open an account here. Start growing this account.
I love my Chipotle.
Okay, what documents?
Do you have a dollar account?
Oh, dollar account. Do you have a dollar account?
So we don't have a dollar money market fund today, but we're launching one early next year. So yes, we'll have it's not confirmed, but the numbers that I'm seeing is anywhere from 6 to 7% on the dollar. But we offer ETFs, which are dollar investments.
Right.
So if you just want to go on to your account essentially, and so we have the S&P 500, we have semiconductor fund, which is really interesting.
Right.
We have technology funds, and just going back to what I was saying earlier, during this year, our dollar funds have generated very strong returns. And the value, so this is something I need to share. So when you go to a trading platform, you have all these funds available. So within the S&P 500, don't quote me, but there's 200 companies that offer the S&P index fund. And as a retail investor, technically all are kind of created equally, but they're not created equally. So it depends the type of fund you pick. The value that Dovu does is we take away the noise. With my years of investment experience, I worked at BlackRock, which is the world's largest asset manager. I've done finance my entire career. I was at Deloitte before that, and I studied mathematics at school, so at university, that is. And being able to pick the right fund is really important. So out of that 200 fund, we've said to you, actually pick this particular S&P 500 fund, which is named Blue Chip. And that has outperformed all the other funds because we also we monitor the other funds that are doing. So if we feel the fund manager we picked for the semiconductor fund is no longer performing well, then we actually change it and we'll send out a communication and say, these are the reasons why. And if you wish to proceed, don't do anything. If you want to remain, let us know. And the thing is that in the universe, there's 7,000 funds. And even I get confused and I do this for a living. So we take out the noise. We tell you, okay, if you want to invest in technology, this is the fund manager because we've done our DD, we've done the risk and analysis on the particular fund manager. And that's the value of Dovu, really, because we have other, the lots of trading options that give you everything. And I honestly think it's overwhelming.
Yeah, right.
Quick question, Pete. Quick question.
Okay.
Is it that you're investing for us in SP 500? Is it that you're buying shares for us, or is it that you have something called SP 500 on your end? I didn't get that.
Okay.
Yes. So actually, let me just pull up the Pete. I'm just going to share my screen because I'm a visual learner. So let me just share. Here we go. 1 minute.
And is it the SP 500? I know.
Yep.
Yes, it's the S&P 500. And I'm going to just show you. So again, except we also have some. Okay, so this is Dovu's investment page. And you can see here that we have money market and commodities. Also, just for everybody on the call, gold has done impressively, significantly well. And that's because globally, there's a lot of uncertainty when it comes to political policies, etc. So gold has done particularly well. And I think if I was building a portfolio today as a new investor, having gold in your portfolio, regardless, is really good. And it's USD, of course, so you're earning in gold. And I would put at least 10% of my investment portfolio in gold. Because what happens when markets do poorly, gold does really well. Or if there's uncertainty in the market, gold does really well. So you can see here that the last year return was 40%. And that's not really heard of in gold before. But let me just take you to the S&P 500 fund. Here we go. So we've named it the blue chip because it's just easier because the market in Kenya some of them don't really know, but you can see that these are an example of the companies that we hold within this market. And this is how the fund has performed as at 30th of September of this year. The last year return for the S&P 500 was 36.3%. Of course, I'm so as a financial advisor, I always say, don't look at last year return. The best past performance indicator is always a 3 to 5 year period. So if you look at over a 3 year period, that's 12% and that's 16% over a 5 year period. That means in a 5 year period, every single year, your money grew by 16% and it's in dollars. And that's a really good return. We don't want high returns because that means you're going to be taking lots of risk. And essentially, the fund that we offer is BlackRock, and it is the S&P 500 ETF. And of course, I know I worked at BlackRock, but we have varied funds. So I just want to show you the technology fund, which is also a very strong fund. Again, as a new investor, you can sit here in the house and say, okay, in 10 to 20 years, technology will still be around. So let me invest in tech as a sector. I, as a new investor, will say start with funds because you're diversifying your risk. This is a snapshot of the companies that you hold. It is managed by a professional. And in this case, the professional is Vanguard, which is one of the second largest in investments. And everyone's heard of Vanguard. But just look at the 5 year return for technology and a 3 year return for technology. Look at the 10 year return for technology. It's a no-brainer because every single year your money is growing by 20% on the dollar. You don't get that in business, surely not at the moment, the way that things are going. And the risk in business is very different. So this, again, builds a really nice portfolio for you. And of course, if you wanted to learn more, you just click on the fact sheet. So this is not managed by Dovu. What we've done is we've helped you to understand which fund to pick within the tech space, because if I was a new time investor, this title makes no sense to me. Vanguard Information Technology ETF. As a obviously professional, I understand what it means, but as a newbie, you would not know, but it's a fund that holds technology companies. So you can see that this is not managed by Dovu. It's actually, we hand select the funds available on the platform.
Yeah, is it that the gold you're showing us, is it part of money market fund or just part of buying the shares, or it's part of what? I'm floating. Is it that you're helping us buy those ones? Is it that it's you're investing our money with them?
Yes. So, okay, good question. So, sorry, and Pete, just jump in because you're not.
Yes, let me jump in because I think this investing world can be very confusing.
Very confusing. Right. I agree.
Okay, so there are different assets that you can purchase or invest using Dovu. Right? So when you log into Dovu, like she has done right now, you can choose a money market fund. So the goal for this webinar was to talk primarily about money market fund, so that when you invest in it, you know exactly what it is. That's one of the ways of investing. There are other ways you can invest in gold, right? So if you're thinking, I need to own gold in my portfolio, you can jump into the portal and click on gold and set aside a certain amount of money there and do it. Or you can decide, you know what, I want to be involved in what is called ETFs. Exchange traded funds. So this is a basket. And we talked about this the last webinar that was about ETFs. So if let's say you want to own Adobe, NVIDIA, Microsoft, all of them in one basket. So you tell this company or this investing vehicle, can you put in my basket a piece of NVIDIA? Okay. I also want, what else do you want? MasterCard. Okay. What else? Oh, I want Apple. So all of them are packaged very well, and now you buy it as a basket. So you can log in here and choose those ETFs. There is a tech ETF, primarily tech companies, microchips, blockchain. There's actually a KWeb too, Chinese companies that you can also purchase. So when you log into Ndovu, we actually even didn't talk about bonds. So those are the several ways that you can invest. So you have money market funds, ETFs, gold, and bonds. So that's how you do it.
You're kinda brokers to these other ones, apart from the IMF.
Not IMF, MMF.
Yes.
Yeah, I think what happened is that we jumped into other things. So I think some people got confused.
Yeah, that's where
because originally we were just talking about money markets.
Exactly.
Right. So these other ones.
May I say something?
Yeah, sorry. Yeah.
I think it's good that we jumped there because then it showed, in a little bit like what's possible. Yeah. And Pete said go in the account and choose, and if you decide you want to do this, I want to add something on that. Get yourself a financial advisor. Get yourself an investment advisor, and they will help you build a portfolio. And so based on your risk tolerance and the goals that you need, then you can decide how much money am I going to put in gold, in blockchain, in equities, in money market funds, and you just build a very nice portfolio. And the beauty about that is that let's say you have a lump sum and you want to invest. The best way to invest and the best time to invest that lump sum is now. And then after that, it's advisable to put money monthly, quarterly, annually. Monthly is best if you can, because of something that is called dollar cost averaging. So that every time you are adding some money, you are buying sometimes higher, sometimes low, and you average in your costs and you just let the money grow. So when we are talking about all these, based on the question, are you investing us in gold or whatever? No, I don't think they are giving us, I think Dovu is giving us, it's going in the market and choosing different tools and different things for different people and putting them in a basket. And then you can go there and build your own basket from there. And I think that's beautiful. And I think that's very, very good for the Kenyans, for people in Africa, because then you get to tap into these other fund managers like blockchain and all that. So really good job.
Right. And let me just
Which countries are you venturing? Kenya, you mentioned. Are you in US?
No. So the only way we're in the US is through PED, actually. And that's because we've seen a huge demand of diasporas wanting to hold the money market fund, the infrastructure bond, and also Rwandan bonds, etc., which we're adding onto the platform as well.
Right. Yeah, so Ndovu is primarily based in Kenya. So I would say this: if you have any other questions, you can set up a moment to discuss with Ndovu. They have their own financial advisors. They can give you a 30-minute free session to go over all these products. And if you have questions about how to invest, how to fund these accounts, you can reach out to Caroline, you can reach out to me. We'll guide you. That way you have, remember, the biggest thing about Ndovu is relationships. So you want to establish that relationship with someone. If I tell you, reach out to Caroline, she will help you. You are not getting stuck. It's not just some number that you're given. It's someone that you're talking to. And she wakes up in the middle of the night to make sure that she answers your question, because she knows at night over there is morning here. Morning here is, we have different time zones. So she's very good in that. So I'm going to wrap it up. I know it's almost an hour and a half. Oh, okay. Let's see if there's any other question that I can take, and then we will wrap it up. Let's see. I don't see any other questions here. Okay. I really don't see any other questions. So let me do this. Caroline already sent the contacts on.
I think also, Peter, what we can mention, we have previously done a Zoom session with Ndovu on these other products. I don't know whether you have that somewhere.
Yeah.
So those people who may be interested in other products that Ndovu provides, especially the ETFs, we had a whole session on the ETFs.
Right.
They can watch that and they will have a better understanding of other products that Ndovu offers.
Yes.
Today, we're basically just focused on the money markets.
And I thought, Tim, it was going to be a very simple discussion, but it's ended up being, very enticing and lots of questions, but we really appreciate.
Yes, but also something I can add is that once you start that rabbit hole of finances, you realize there's so many products out there. There's so many ways you can invest. Right. And I personally would encourage people to really educate themselves a lot, especially people who are in the US, because you can take advantage of the market in the US. And now we have Ndovu, you can take advantage of the market in Kenya and in East Africa. Right. And for me, I think Africa is the next frontier, giving really good returns. Don't listen to the news. Like Esther said, the numbers tell a different story. And sometimes we are losing out because we are focused so much on the news.
And Tim, I know what you're saying there because you want to go back to Kenya. That's the reason why.
But I know one. What measures do you have? Musianguke kama the cyclones. What measures do you have?
Say that again. What measures about?
What measures do you have not to go down like the cyclone?
Oh, okay. Yeah, that's a good question. Yes.
That's a really good question. So the thing is that, so Ndovu was regulated by the Capital Markets Authority, but I know so was Cited. And that's what is so disappointing about this market, because we are working so hard as an industry, as a whole industry, so the whole of asset management. And so for that one event to happen, it is really saddening. However, this sort of stuff also happens in the US. So FTX, SVB Bank, I don't know if you've heard of these banks, but it did also happen in that regulatory system. Mm-hmm. The only guidance and confidence I can give you is that we're also regulated by the FCC, FINRA, and FCA. And what that means is that you can rely more heavily on their governance structure to know that actually we wouldn't have been able to acquire that license if we were not doing what we said on the tin. And the other thing I want to say is that we're working very closely with the Kenyan regulator to regulate other entities and also regulate us better, because that's been in that's my background, right? That's what I did at BlackRock. And so that's the only thing I can say. It's just because one bad egg has, ruined the regulatory badge that you get as a result of it. And they have cracked down quite a lot. So yeah, that's the only thing I can say is they take comfort that we're also regulated in the US and we work with regulated partners. And we couldn't have done that unless we had the right governance in place.
Right. And I also say this, RB, that you are located in Westlands. So I have a few people actually coming in December. My good friend Joram is going to visit your office. I hope he gets a cup of tea. Esther, I don't know whether Esther is going. But
Mandazi.
Yes.
I will visit you. I will. Very soon. I won't say when, but I will.
Yes.
Count on that.
Yes. That's awesome because then you get to meet RB, Caroline, and establish those connections too. All right. So let's end it here.
Can I have one last question, Pete?
Oh, yes, Mr. Ngoshe. Yes.
Is Ndovu operating as an investment company bank or what level are they at? Like Diane Blair and the rest of the gang?
So we are a fund manager.
Fund manager.
So we're in the space of Old Mutual, CIC, ICA Lion. Yes.
So I cannot buy individual Kenyan stocks with you guys, right?
No, we're actually running an internal survey to see if that's something that our users want. Because the idea is that we want to be a one-stop shop, right, for everybody.
I want that.
Yes.
Okay, thank you. I'll add that to our customer service feedback form. Not service, but customer feedback we're gathering.
And that's a good question, Amos, because if you go to Capital Markets Authority, then you can look up who are these stockbrokers. So if you go to stockbrokers, Ndovu is not there because they are not a stockbroker, but you will find them as a fund manager. And they actually could also be getting other licenses like collective investment schemes. So this is where you go look for those companies and figure out, are they approved or not? So very good.
Yeah. I was thinking of it on like they say, a one-stop one-stop management. So if there was that ability, but hey, it's okay. We'll get there.
Yes, we will. All right. Thank you so much, guys. This was awesome. We'll do this again. So the next topic, we can figure out whether it's portfolio management or something else. But it's really awesome. Esther, I know you woke up early. Thank you so much for attending. Mr. Cairo, awesome. You do taxes and you had good questions about tax returns and people understanding. My good friends from KCFA New Jersey, man. Awesome. Amos, Timothy, everybody that attended. It's really, actually, I did have a few young adults in Kenya that took a class recently and they have opened accounts. And they are actually starting with 500 shillings. So that's how we encourage everybody to participate in this. And if you have questions, reach out to Caroline, reach out to me, reach out to Esther. Just get that understanding of what you're investing in. So we really appreciate it. Any final words, RB?
No, I was just going to say the best time to invest was yesterday. And the idea about investment education is that until you don't actually start with small amount of money, you will never learn because theory is very different to practicality. So take the leap, start with something small. And that's how you start growing your portfolio.
All right.
One thing I can add also is that, Pete and Pete, we've been very good at, or we've strived to educate people on finance because we believe if you're well educated and well informed, you're able to make better decisions and take advantage of really what's available because we have a lot available to grow our wealth. And so one area also you can visit is our website. I'm sure we have some of our past videos that we've done and there's tons of information that you can read and get to, educate yourself more on the financial journey. And you can reach, to me or Pete if you have any questions. Yeah.
Awesome. Well said, team. Thank you so much, guys. So for those that, I know it's still almost 12:42, you still have the rest of the day. You can go hiking, take advantage of the good weather. Thank you so much, RB. Thank you, Caroline. Esther, awesome. Really nice to see you.
Thank you all.
Great.
Thank you.
All right, Chacha. Thank you.